Now, I understand that, but let me kind of explain why I'm not all that concerned with that up AB. Because let's think about the technical damage that this up AB has to go through to fulfill its extension. It has to break through this down AB right here, that sub down AB. It has to break through, there's pretty strong trend line here that it has to break through. And it has to go, you know, basically rally in the face of all these AB downs that it's currently in. Now, it absolutely could, it could rally up, take this A out, keep this A intact, go up and hit this extension, and then fall again. It could do that. It could do that. But you know what? That's not the scenario that I'm seeing. If that does play out, then I'll sit on my hands. If I'll take a small stop, right? I need to start structuring trades to the short side. I'll take a small stop. If this thing rallies up, I'll take a stop. And then as it rallies up and it fulfills this extension up here. So if price is able to rally up and fulfill this extension up here, then you know what I'm going to do there? I'm going to sell, sell, sell. And that's going to provide me an even better trade that gives me even better risk to reward. I'll be able to sell within this area here, put my stop above here. So if I get up there, I'll essentially be able to risk maybe 100 pips and look to make about 750 pips. Pretty darn nice. But right now, I've got to be a seller. Right now, I've got to look for an opportunity to start selling. So let's go into the shorter time frame. And I don't want to just blindly jump into this. Let's go to the shorter time frame and see what's happening. Okay. Here we go. All right, there we go. Okay, so we have recently, in fact, let me go to 1 hour. In this 1 hour, we have it happened a while back. We put this 382 retracement in, but in the 2 hour chart, if you're wondering why we kind of got this rally, well, this rally, what happened was this rally allowed price to rally up and fulfill its 382 retracement. And what's interesting is that this AB down, if we turn and fulfill, we're looking to go down to 35 on this extension here, which is actually really where I do believe we could go down there. I'm going to target 35.76, but I actually do believe we could go down to that level. Now, here's the trade that I'm looking at. Here's the trade that I'm looking at. If I weren't, I'm already in this trade. If I weren't already in this trade, then this would be the trade that I'm looking at. We've got this daily down, or I mean this 1 hour down AB right here. I've got a daily bearish bias. I already know that. If I'm, you know, seeing things here, I can see that we have potential for, well, first of all, we have recently put in a lower low and what looks to be possibly a lower high. Type in a wire yes if you see that. Lower low, possibly a lower high with a breakdown. We've got the kind of an inside left tip, center tip, right tip formation here. If we are able to fall, if we fall and this reverses, then what's going to happen is this. This high up here is going to hold. We are not going to break through this high right up here. So if I get into this trade, I think actually having a stop, or I'm already in this trade, but if I weren't in this trade, I think having a stop above this level is pretty fair, because if we break above that level, then from my standpoint, this is kind of the line in the sand that we need to protect, and price shouldn't break above. If it does break above this level, then we're probably rallying up, and I need to look at that secondary sell zone. So how do I get into this? Well, first of all, if I'm looking at just this day, this 1 hour down AB, we've got a retracement in. We've recently put in a lower low. We're sitting at a relatively high price. Now, if I got a daily bearish bias down to 35.76. If I can find an area to get in and get enough reward in the trade in comparison to risk, then I should probably get into the trade. So let's see if we can find an area that makes sense to get into. And I think we can. In fact, I mean, man, well, you need to look for every reason you can find to get short. I mean, honestly, there's nothing I can say to like say, well, don't get into this trade. In fact, before this webinar, what I was going to do is I was going to say, hey, I was looking at this and I was like, you know what? I think what makes most sense if you're not in this, I think what makes most sense is getting short on a break below 38.63. So here's what I'm going to do. I'm going to just type this out and call it out right now. Again, remember, this is not advice. This is not advice. But I'm going to call this out right now. And here's the trade. 35.76, okay. Currently short at 138.63. Target 135.76. Stop 140.15. The reason why I'm willing to put my stop at 140.15. Now I would typically place my stop above this A. The reason I'm willing to put my stop above 140.15 or at that level there is because if price is able to break above that, then that means that we put in now a higher high, which means that we're more than likely, we've already kind of eaten through a lot of this resistance up here, and tells me that we're probably more than likely going to break higher and make an attempt to fulfill that daily up AB that we're in. That's the reason why I want to place my stop there. So let me go, give me a second here. I'm just doing a 2 hour fast. Move this up a little bit. There we go. Hold on 1 second. Can I drop my target? No, I'm going to keep my target at, yeah. Okay. All right, so let me label this. Remember, this 35.76 is the daily 380 retracement, okay? That's the reason why we have that target there. All right, so I'm currently in this trade. Go ahead and take a picture of this, type in done, D-O-N-E, when you got it. And yes, I will share these workspaces with you. Now, if, hold on 1 second here. Okay, let me pull this up on a daily one more time because I want to show you here. If I take a stop at 40.15, then my next trade will be right here. 43, right around 43.18 will be my next sell zone. So if this trade doesn't work out, then, well, that's fine. You know, that's okay. They don't always work. I'm still going to look to short. My next short opportunity will come at 43.18. This trade will look like this. My stop will be at about 44.20. And my target will be 35.76, which is still the 382 retracement on the daily. So this will be, if I take a stop on that, on the 60-minute chart, this will be my next opportunity right here. In a second. So I am going to take a stop. The first trade, short again, once price goes to 143.18, target 135.76, stop 144.20. Time to wire, yes, if that makes sense. Because if I take a stop on this trade right here at 40.15, then I am confident at that point, if I do stop out there, I do believe that we'll go up to this 43.18 level. We'll fulfill this extension up here. If you wanted to try to buy, if you want to turn this, if you take a stop here and then you want to start to buy up to 43.18, go ahead. You can try to do that. That's fine. That's not what I'm going to do, especially using my style of swing trading. That's just not what I'm going to do. But if you wanted to do that, you can. I will say this though. I'll show you a better way. So, all right, let me just explain this real fast. So if I'm in this trade right here, so I am currently in this trade. And let's say I'm currently in this trade and this trade takes a stop. Well, if this takes a stop here, then I believe we are going to be rallying up then to 43.18. And you might be wondering, well then, why, Tyson, why would you not look to buy that from 40.15 to 43.18? That's 300 pips. Why wouldn't you look to buy that, Tyson? The reason why is because I have a daily bearish bias. Type in a wire yes if you understand that. That's the main reason why. That's, it's called, I need to follow rules. And one of the rules that have kept me in business for 17 years, one of the ways that I've maintained being a very profitable trader for a very long time is to follow these rules. And so for me, if I do take a stop, I'm going to be sitting on my hands and I'll just be waiting. And some of you in here might be doing very, very well. Some of you hopefully will be doing really well. And you'll go up and make money as this rallies up to 43.18. I won't. I'll be sitting on my hands. Once it gets up to 43.18, if I take a stop here, then I will look to short again. So the nice thing about this is I am very, very confident. This whole trade is based on my confidence that we're going down to 35.76, right? So what's going to happen is this, is I am currently short, and I'm either going to lose 150 pips, and then this trade will trigger, and then I believe this trade triggers, then I'll make 750 pips, so I'll make a net 600, or I believe we're going to get the fall, and if I didn't believe this was going to happen right now, I wouldn't be in this trade. I actually believe we're going to get the fall right now, and I'll make 250 to 300 pips. Either way, I need to participate and be ready to trade the next push down that's going to take us, the next good push down that's going to take us down to fulfill this 382 retracement. Type in a wire yes if that makes sense. So I may lose 150 pips, but then make 700 pips, or I might just go down and make 250 to 300 pips. And you might say, well, what if you get stopped on both of them, Tyson? Well, until we take this 4634 level out, just so everybody understands this, I'm going to continue to short it because I am very confident we're going down to 35.76. And I will find a way, either now, up here, or maybe even a little higher to make money when we get that push down to 35.76. That's what. Possibly, Richard asked, is it going to have a bullish run then after 135? Richard, I don't think so. No, I don't think so. I'm not a perma bear on the pound yen, but I am a bear for a while anyway. And so no, I don't think it's going to be ready for a real amazing push higher. But hopefully this makes sense. Now here's the cool thing. So some of you in here are again saying, geez, Tyson, you're going to sit on your hands for 300 pips. If you get stopped out here, it's going to rally 300 pips. Why would you just sit on your hands? Well, again, it's the rules, but then also let me show you this. There's a way that I could take advantage of this trade if I do get stopped out. That means that the pound is starting to get strong, right? If I take a stop on this trade right here, it means that the pound is gaining strength. Well, is there a way to take advantage of this if the pound starts to gain strength? Yes, there is. Pound out. Okay, so this level here is a level that I've been talking about for a while, and it's one that's you're going to want to remember and pay attention to. 136.41. Now that's way up there. $136.41. The reason why this is an interesting level is because we have this down AB. This was formed during Brexit. It's a long-term down AB. But we haven't put in a 382 retracement. There's something very interesting about this level in the short time frame too, and I'll show you that. But if I'm looking at this picture here with the addition of this right here, whoops, not that, this right here, as a swing trader, type of wire yes in the question section if you think, yeah, this is a pretty nice picture. We could see a rally up to this retracement level. We've got this upward AB and risk to reward. If I'm going to look to go long, and I was a swing trader, risk to reward says, hey, wow, I've got a bunch of pips. I've got more than 1,000 pips, 1,200 pips on the upside, and only, maybe 350 pips on the downside. Pretty darn nice, right? It's a swing trade. So remember what this 36.41 level is. It's the 382. And let's do this. Let me bring in a couple things. I'm gonna transfer this over, and I'm gonna go to the shorter time frame now. We'll go to the 1 hour chart. I want to just show you something really interesting. So there are gaps that form in the currency markets, and right around, I don't know, 98% of all gaps, in fact, I would say all gaps over extended period of time are filled pretty much 100% of the time. And so right here, this was Brexit. This was the Brexit move. Everybody remembers that. Then this was the Thursday, Friday price action after Brexit. This was the Friday close after Brexit. This was the Monday open after Brexit. Type in a wire yes if you see the gap. That's really interesting because this 36.41 level is the daily 382. And that's also, once price goes up to 36.41, that's also a level that will go up to officially fill this gap. This gap has never, after Brexit, been filled. It made an attempt to fill. I talked about this during Brexit. It made an attempt. It failed. And then it pushed down. And since that point, has never come back and filled that gap, which is very interesting. There's another gap here too, right back here, that hasn't been filled. right here. Right there. Made an attempt to fill. Didn't fill. Zoom in so you can see it a little better. Had a wire, yes, if you can see this gap. Technically, the gap fill will be right there. So, okay, so those two levels right there are very interesting because they're gaps. Remember what this was right here, this AB right here, A, B. That was the daily up AB. That was the daily up AB that was starting to, that formed, that we now got a retracement in right here. We've got a retracement in. Does anybody else find it fairly interesting that this 1618 extension is within shouting distance, essentially, of that gap that hasn't been filled? Yeah, I find it very interesting. And that tells me that that could be a place, if and when we start to get a sustained rally up, that is a place that we should be able to target up towards this 29, 26, 29.70 point. You guys see that? You guys understand? So what's cool about this is called a level of confluence or a cluster area. It's a gapping area, which is an area that there was an obvious imbalance. And how do I know there was an imbalance of supply sitting there? Well, because the only way that the market moves and gaps down like this from here. So basically, if we look here, over the weekend, price gapped 56 pips. Now, that's not a huge gap, but price didn't have enough strength to go up and fill that gap. The only way that that happens is if there's an imbalance, if there's more sellers than buyers, which means that there's more selling pressure, much more selling pressure, because it didn't just stop there. It gapped down, made a weak attempt to fill the gap, and then just plummeted from that point. There is a humongous imbalance of supply, meaning there are probably a tremendous amount of people and institutions and funds that want to short up here that didn't get a chance to short, that maybe had orders to short, that maybe had orders to get filled that were looking to trade at that level, and they didn't get an opportunity, so they'll remember it. If they're going to remember it, the fact that we have this daily up AB with an extension right near that level is pretty interesting. So remember the pound yen. Pound yen, if I get stopped out in this trade, that means the pound's getting strong. Well, based on the case that I've just built with the daily retracement up at 36 level, and the fact that we have this daily up AB right here looking to fill this gap and this gap up here, does the pound dollar look like it might be one of the better pairs in the pound to start buying? Yes or no? Yes, absolutely yes. So I say all that to say this. If the pound is going to get strong, the pound dollar is one of maybe one or two pound pairs that I want to start buying. Not because I am just, hugely bearish the dollar, not because I am fairly bearish the dollar, but it's because of the technicals, because of the gaps, because of what I'm seeing that we need a retracement up to 36.41. Plus we've got this up AB and a daily looking for an extension. That extension is pretty close to this gap. That's all interesting, very, very interesting stuff. So 29.26 is going to be a target level for this trade if we're able to get long. And so I think there's a pretty easy trade in this. And I'll show you here. So we've got this down AB on a 60-minute right here. We got to worry about this. We have to worry about this down AB. Right? Do not ignore this down AB. At what point can we stop worrying about that down AB? If we're going to be buying, if we're going to look to buy, at what point can we stop worrying about this down AB? Well, we break the A, right? If we break above the A, we no longer have to worry. which means if we can break above this level, then we have a reason now to believe that we're heading higher. We're no longer competing with this down AB, and that tells me now we're having, we have this AB sequence, which is probably more than likely going to look something like this. So let me just see what kind of retracement. 786. All right, so this more than likely which means we should be able to essentially put our stop. I hope this doesn't confuse anybody. It's probably gonna, but I'll try to make this as clear as I can get. All right. So if we break above 25.95, we take this A out. We then no longer have to worry about that downward AB. So let's assume that that happens, right? Well, if that happens, how did price get up there? Well, more than likely price fell or went through this pattern. It had this A, B, C, so A, B, C, D. 2-7 extension. Type in a wire yes if you agree and you understand. Okay. Then it went A, B. A, B. Like that. And at this point, we're still not buying. We're still not buying. At this point, what we probably see is we probably see some type of weak attempt because we'll probably start to get some type of, aggressive move higher. We'll then go up, take this level out right here, come down, and then rally higher. And why will we do that? Because what this is essentially setting up for, well, is really something like this. This is a trend line here. Break above. We might not go up to the 2.7. In fact, even if I took this out, let's just say this doesn't happen here. Essentially, that right there. So, what does all this mean? It means this. It means this right here. Let me just zoom out. Clean this up a little bit. All right, let me clean all this up. Means this. Buy on a break above 125.95. Target 129.26. Why 129.26? That is the daily up the extension. Stop 124.05, which is below the recent 60-minute up A. How do I know that's going to be below the 60-minute recent up A? Because we're currently in this up AB, which means we're going to go ahead and extension. So the new A will be, this C will become the new A. Type the wire yes, that makes sense. So therefore, that's going to be a safe spot to place our stop. So if we can take this trade like this, we can get into this trade with, 190 pips worth of risk and 325 pips worth of reward. Not too shabby. I like it. I like it a lot. So here's the deal. If I take a stop in the pound yen, then what does that tell us about the pound? It tells us that the pound is getting strong, right? which means that if the pound is getting strong, it's probably getting strong against the dollar also. So therefore, why not flip to the pound dollar and look to buy the pound dollar, because that actually gives us a better bullish case than the pound yen does. Having a wire, yes, this all makes sense. All right. Perfect. Good. So let's pause for a second. So we are currently in this trade right here. I'm currently in this trade right here. If price rallies up and takes a stop, then I'm not going to sit there and cry about it. That's fine. If it takes a stop, then chances are, then that means that I'm getting long the pound dollar. And so I get long the pound dollar, and the pound continues to rally. I make 325 pips on the pound dollar. At the same time, I'm waiting for pound yen to rally up into this level, and then when I hit my target in the pound dollar, I then start to go short in the pound yen. All right, one more time. Type in a wire yes if that makes sense. If the pound gets weak, I make money in the pound yen. If the pound gets weak, I make money. If the pound gets strong, I make money. Yeah. Is following? Yeah, this is good. This is so. One more thing, and again, I think I've already probably already confused all of you guys enough. But one more thing. Let's think about this for a second. Let's think about this. Let's go a little deeper. So we just set up a trade where if the pound gets weak, we make money. If the pound gets strong, we make money, right? We'll make money in the pound dollar if it gets strong. If it gets weak, we'll make money on the pound yen. We could make money on both. We could make money on, well, first lose money in the pound yen, but then make more money on the pound dollar, and then make a lot of money on the pound yen if it gets strong and then weak. But what are we really doing here? Let's think about this. We're looking to short the pound versus the yen, but looking to buy the pound versus the dollar, right? So what currency pair should we look at? What's really, if we're looking at these trades here, is there another currency pair that we should possibly look to see if there's trades in? Well, think about this. Yeah, and a lot of you are typing this in. So short pound yen, long pound dollar. So we're selling the pound here, and we're buying the pound here. So therefore, don't these two cancel each other out? Type in a wire yes in the question section if you agree that these two cancel each other out. Which means if I'm buying the pound dollar, what am I really doing against the dollar? I'm selling the dollar, right? And if I'm going short the pound yen, what am I really doing against the yen, right? I'm buying the yen, right? Which means, shouldn't we look at short dollar yen? Again, type in a wire yes, that makes sense. Guys, this is good stuff. This is stuff that, like, I know it's maybe like, wait a minute, what? Okay. Trust me, your mind will start to work in this way. Over time, your mind will start to work in this way. It took me, quite a while to get my mind working in this way, but it's important to understand this kind of stuff. So these are two really, really good trades, the pound yen short and the dollar or the pound dollar potential long. But if we're really thinking about this, let's actually go a little deeper, and let's see if we can find a trade potentially in the dollar yen. So I need to make sure, type in a ME, M-E, in the question section if you understand how I got to looking for shorts in the dollar yen based on the analysis that we just did. Buying the pound versus the dollar, looking for dollar weakness. Selling the pound versus the yen, looking for pound weakness, yen strength. Therefore, it leads us to the dollar yen short. Okay, perfect. Is there any other, now I don't want to just blindly, if I do that analysis, I don't want to just blindly short the dollar yen just to say because, oh, well, we have to be bearish the dollar yen because of the analysis we just did. No, we don't, let's not do that. Let's build the case in the dollar yen. And as a lot of you already know, I am bearish down to 109.03. I'm actually bearish lower than 109.03. But 109.03 is essentially where I believe we're heading to. And if we kind of build this case here, right, and we just build the thesis, right, we have this up AB looking for a retracement, down to 109.03. We have this down AB right here looking for an extension. Now, one thing I want you guys to understand about AB sequences, when an AB sequence, this is kind of the way it usually forms out. If it's a longer term or if it's taking a little longer, if it goes A, B, C, and price doesn't just automatically fall to the D, right? If it starts to reverse like it is right now, a lot of times what will happen is it will go back up and test the B before the next fall down. So let me mark that. Mark this B right there. So I actually believe we could rally up to 112.56 before our next push down. Because everything about this tells me we're heading down to 109.03 still. I'm not coming off that level. But I think we actually could rally up to 112. I think we can make an attempt at this B again. Everything about this, I mean, you know, I'm also kind of, sometimes I question myself, should I even wait on this? And we'll go into the shorter time frame to see. But before I go into the shorter time frame, does everybody understand why this does support my bearish thesis? Does everybody understand it? Looking for a move down to the 382, down AB here, sub down AB here. The only thing that I need to now look for or ask myself is, well, if we need to sell, well, where is a high price? Where can we potentially start to sell at? So I've marked the 382 and I've marked the B. So now let's go from here to a shorter time frame. And give me a second. Okay, so remember what this 112.56 level is, right? That was the daily B. Does anybody see a reason to believe that, yeah, we could probably go up to that daily B again? Does anybody see a reason based on this day, this 60-minute AB sequence right here? Yeah, no 382, right? No 382. Not to mention, give me a second, let me. Not to mention, the awkward crown. Yes, I understand. I understand some of you are saying that. Yeah, but Tyson, you're ignoring this crown. Well, no, I'm not. No, I'm not ignoring that crown. But the place that we're probably heading to, especially based on the fact that, you know, there is reasons to believe we're going up to 25 or 112.56 because of this daily B. That's the daily B. Not only that, but I mean, this is a reversal pattern happening here. This is a short-term reversal. We got a sell. We've got a kind of a pin bar, a very long wick to the south, followed by a bullish break, you know, somewhat of a breakout bar. Guess what? We're probably going to 112.56 before our next short. And then I go to the 60-minute and I see supporting factors telling me that. You know, again, I just need to make sure. Does everybody see the supporting factors telling me we're going to at 112.56 or 112, you know, 70, 112.80, right? Right in that area. Yeah. So I'm going to be conservative on this, and I'm going to say we're going to get to 112.80, which is the 60-minute 382. And that's where I want to start to sell. Now, I will say this. If you want to try to buy this up to 112.80, you can. You can try to do that. Now, based on what you guys know about my style, would you guys, am I buying this up to 112.80? Yes or no? I am not. But it doesn't mean that you can't, right? But I'm gonna just type this out how I'm gonna trade it, right? So how I'm gonna trade this is this way. Give me a second. I'm going to go back to the daily here. I'm going to see where I'm going to have two targets in this. My first target is going to be down to 109.03. I know that. But I think I could have a deeper target than that. Oh, 6. I'm going to target this 106.04 level. This is the 618. You know, we have trend lines that tells me that we could get down there. We can retest these trend lines here. So I'm going to have two targets in this, and this will help me essentially establish a better trade that gives me better risk to reward. So 106.04 will be a second target on this. All right. Actually, 106.76, which is this extension, 106.77. That's what I'm going to do, 106.77. That makes sense. Okay, 106.77. There we go. Okay, so now let me go back to, let's go back to the, oops. Now let's go back to the 60-minute, and I'll type all this out. And I think this all makes sense. Okay. My stop can go above this A right here. I think this is a very safe spot to place a stop above, right around 115.60, I'll say. 115.60. Okay. So target one, I've got about 370 pips worth of reward and about 280 pips worth of risk. That's a little more than I'd like to have, but target two, I've got 600 pips worth of reward. So here's the trade. Looking to short between 112.80 and 115.40. 40, I'll say 115.40. Target number 1. Yeah, I'll save these. Target number 1, 109.03. I've been talking about that level for a while. Target number 2, 106.77. Stop. 115.60. Okay. So let me ask, does this make sense? We're looking to short. We have a daily bearish bias. Multiple reasons to be a bear on a daily chart. We're sitting at a fairly low price though, and we confirm the fact that we're sitting at a low price with a potential reversal, short-term reversal happening with the daily bars, and the fact that we're looking for a 382 retracement on this 60 minutes AB here, and the fact that this 60 minutes 382 retracement is near one of the daily Bs, which is pretty cool and should help support our case. So that's nice. Once we get up into this zone, we want to look to the sell zone. We want to look to start shorting. The 109.03 level is the daily 382 retracements. Daily 382 retracement. 106.77 is one of the daily extensions. Our stop will go above the 60-minute A. Type in a Y or yes in the question section if that all makes sense. On top of that, the analysis that we did in the pound yen and the pound dollar supports the bearish bias in the dollar yen. Okay, so let me recap fast. I am currently short the pound yen. I like being short the pound yen. This is the trade. I've got a target down to 35.76, a stop at 40.15. If I take a stop in that trade, then chances are I'm going to get long the pound dollar. I'll get long the pound dollar with a target up here and a stop down here. So what that means is I'll lose 150 pips in the pound yen, but then I should, if we get a continuation rally, which I believe we will if I get stopped out, then I'll make 325 pips in the pound dollar. So therefore that'll be nice. Once I hit a target in the pound dollar, chances are that'll put me in my new sell zone in the pound yen, and I'll start to get short here for another opportunity to make 700-800 pips on the downside. So I'm either going to make money if I get stopped out and it rallies up, or I'll make money now if it reverses and it just starts to sell off, and I make money then. With all that said, I'm looking for a short-term rally in the dollar yen, followed by a nice sell-off after we get up to 112.80. Does all that make sense? All right. Perfect. Now I have to point out some obvious things. There's a few obvious things about these trades. One of the obvious things about these trades is that there's a lot of you in here that do not like to take trades with stops that are 190 pips wide. Or as an example, in the dollar yen, a stop that is 250, 300 pips wide. That's not, a lot of you, and I get it, a lot of you are not fans of doing that. Neither was I when I first started. This is much more of a swing style of trading, and it's the way that I've traded for many, many years. Now, the reason why I've traded like this for many years is because I personally have never found a consistent way to day trade or scalp trade. I haven't. Until recently, in fact, about 6 months ago, I thought I had found something that was really, really exciting for me, which is the divergent zone trading. It is an amazing strategy. It's an awesome strategy. I love divergent zone. The problem I have with divergent zone, and a lot of students are doing really well with it, the problem I have is I have to get up at 1:30, 2 o'clock in the morning to trade it. I don't know about you guys, but I don't necessarily like getting up at 1:30 in the morning every day to trade a strategy. Type it in me if you enjoy doing that, or type it in NO if you're like, yeah, no, It sounds, you know, it sounds great. Here's the thing, is it sounds really good if I didn't do anything else. Like if I wasn't MTI's, one of MTI's analysts, if I didn't have a wife that enjoyed spending time with me during the day, and a niece that likes to go to the park with me, and sons that are active, and you know, and I could, you know, take some naps during the day, then that wouldn't be a big issue. But I've got other things going on. I've got other priorities, right? One of the priorities is obviously my family. That's number one. Number two is I really enjoy helping students, you know, become successful. And I can't do that if I keep getting up. I'm going to be brain dead. A lot of you probably think I'm brain dead at Tyson. Well, that doesn't change anything. Oh, okay, maybe it won't, but if you think I'm bad now, it's even worse when I get up at 1:30 in the morning every day. You know, so here's the thing: Dead Zone Scalper has, I believe, maybe solved a couple things for me. First of all, I think Dead Zone Scalper has given me a way to quench the desire to be more active. I've always had a desire to be more actively, you know, to generate an income on a daily basis. I mean, I don't generate an income on a daily basis because I've never really traded that style. I don't really necessarily need to, nor have, you know, I wanted to, but I've always, you know, it'd be nice to be able to do that. And another thing that I want you guys to be aware of, and this is very important, is that a lot of you, some of you are in like Josh's leveling room, right? And Josh is an amazing trader, and this is similar to my style. Maybe I go for a little bit higher returns. I'm typically looking for anywhere from, you know, 50, 70 upwards to 100% on an annual basis. Whereas what we've started to do over the last, you know, few years really is find formulas that consistently make between, you know, 2, 4, 6% on a monthly basis, which is great, right? You make 5-6% on a monthly basis for the next 4 or 5 years. You're doing everything you want to do in life. The problem is what do you do when you start with a smaller account? You're not going to necessarily grow a smaller account. You make 4%, 5% a month. If you start with $1,000, it's going to take you probably 3, 4, 5 years to really grow to a point where you're generating income. And that's where, you know, students have asked, well, how in the world, how can I grow my account faster? And one of the only ways you can do that is to be more active, to find a way to generate income on a daily basis or on a consistent basis. And Josh has done that. Josh is, a lot of you know this, Josh is actually, when he opened up one of his first accounts, and he was trading what's called the London breakout strategy. London breakout strategy is a great strategy. It's similar to the dead zone strategy that I'm going to talk about, but it trades more in the active zone, which is during the London Open, right? At 2, 3 o'clock in the morning. So Josh had to get up at 2, 3 o'clock in the morning, but what he did is he did this for about 1.5 years, and he turned a $500 account in almost $40,000 in 1.5 years. He compounded annually, or on a monthly basis, he made like 12, 15, 20% on a monthly basis. And he did it because he was actively taking trades every single day. So he started with 500, and you know, he made $8, he lost $4, and obviously he started really small, really slow. Right? Lost $5, made $5, lost $6, made $9. Started really slow, but then it started to build, right? And then he started making 400. You know, as it started to build, $400, $150. Yeah, he'd have some losing days, but it really started to build. And then he'd start to get to points where he could withdraw, right? He withdrew 6,500 here, withdrew 2,000 here. And he was making 250, 279. And over the course of about 1.5 years to 2 years, he built this up where he was able to start to withdraw $10,000 at a time. He was making $1,400 in, you know, 51 minutes here, $7,500 in one day. He was trading this to a point where he was making a lot of money, and he started with $500. How did he do this? I can tell you this right now, you can't grow a $500 account into $40,000 by getting 5% per month. You can't do it in 1.5 years. You have to be able to grow an account at 12, 15, 20, 25% on a monthly basis to be able to grow an account like that. How many of you in here would be interested in a strategy that can grow your account that fast. I know yeah, sure, that's amazing. Now, obviously the proof is in the pudding, right? The proof is in the performance. So let me show you. Let me show you this, how this works. It's called Dead Zone Scalper. We have 7 seats available for tomorrow's tagged events, putting on an additional lead-up trading session tomorrow, and we're cutting it off at 7. 7 more students can get into this. The reason why is because Tad has told the executives that it's getting to the point where he doesn't want more students. He doesn't want to just load the students into it, because he wants to make sure he can answer all the questions, make sure he can get everybody up to the level that you need to be. Now let's do this. Let's walk through, and I want to show you how this works, okay? So let's look at the last 2 days as an example. All right, the white area is the dead zone. The gray area is the active zone. So this strategy trades in the dead zone. And what we do is this. Here's how we trade this. Number 1, look at the color of the bar of the 12 p.m. bar. So if we're following this first rule, what color is this bar? It's blue, right? So here's the rule. If the bar is blue, think up. If the bar is yellow, think down. So this was Monday. On Monday, this was the first bar in the dead zone. What direction did we need to be thinking on Monday? Up, right? I want you guys to do this with me, because I want to show you this using these 4 currency pairs. We've been talking about this for 2 weeks. These 4 currency pairs over the last 2 weeks doing exactly what I'm going to show you right now is up 26%. That means that if you had $10,000, you could have grown your account by you could have added $2,500 to your account just by doing this. So I just want to show you this. This is amazing, right? So, all right, we're looking to buy. The second step is this. Second step is this. 2. If 12 p.m. bar is blue, wait for a yellow, then sell on, or I'm sorry, then buy on the next blue. So I'll show you how this works. And then if 12 p.m. bar is yellow, wait for a blue, then sell on the next yellow. All right, so make this a little smaller. So how does this look? And then also, let me just finish typing this out. 3. If buying, place or stop 10 pips below recent low. Risk 2% to make 4%. Meaning 2 times reward to risk. If selling, place or stop 15 pips above recent high. Risk 2% to make 4%. Okay, so let's walk forward and see how this this was, right? So we're looking to buy, right? If we're looking to buy, now we've got our alert bar, right? We've got our alert. So we know we need to be a buyer. We then, what did I say here? If the bar is blue, think up. If, there we go. If the bar is yellow, all right, then at 12 p.m., if the bar was blue, wait for a yellow. So now we've got, so number 2, now we've got a blue bar, now we've got a yellow. So we're going to buy on the next blue. So on the close of the blue. So this right here would be our first long. We would go long right there. Our stop would go 10 pips below this low right here. So our stop would go at 63.92. Type in a wire yes in the question section if you understand why this would be our trade. We would go long on the close of this blue bar right here. Our stop would go here. Our target would go 2 times. We'd risk 2%. Our target would go 2 times our risk. So we'd have about a 20 pip risk, which means we'd be looking to go for 40 pips reward. So 40 pips above this, our target would be up to about 53, 64.53. So let's mark 64.53. 64.53. That's where our target is. All right, does everybody understand? Okay, so now we're long. We're risking 2% to make 4%. We then go to sleep. Or whatever, not go to sleep. For me, it's 11 a.m. So we then do our thing. We let the markets do what they're going to do. We don't intervene. We've got our trade in place. We've got our stop down here. We've got a target up there. We're not sitting there babysitting the trade. We're just letting it do its thing. All right, let me ask. Type in a wire yes in the question section if you see that this trade went up and hit a target. That means that you made plus 4% on that trade that day. 4% on your account. Okay, now you're done. It's 1 trade per day, and you don't take any trades that have more than a 50 pip risk. All right, so now let's go to the next day. All right, this was yesterday. So now we're into yesterday. So what do? We look at the first bar. Okay, so the first bar is yellow, right? If the first bar is yellow, think down. All right. If the 12 p.m. bar is yellow, wait for a blue bar, then sell on the next yellow. So now we just got to wait for the blue bar. Now we got a blue. We're going to sell on the next yellow. Bam, right there. That's where we would enter. Our stop would go 15 pips above this recent high, right up in here. Our stop would go, what is that, 60, 78, 83. Our stop would go 64.83. Our stop's up here. Our target is going to be 2 times our risk. So our risk is 30 pips. Our target's going to be 60 pips lower than our entry. So if we're targeting 60 pips, our target's going to be down, well, basically down to where, 92.63, right here. All right, does everybody agree that this is the short? This is the trade? Sell. We're risking 2% to make 4%. We're done. You go and live your life at this point, right? You don't have to sit in front of your computer screen. You don't have to do any of that. You just go and live your life. Do your thing. The red dots are fractals. And the green, these are fractal lows and fractal highs. So now we're in this trade. You're letting it do its thing. You're not stressing about it. You're like, hey, oh man, I was up a little bit. Should I take? No, just let it do its thing. Yes or no? Did price go and hit our target? Yes, plus 4%. Plus 4%. Okay. Can anybody tell me what time it is? It is 11:18 Central, which means it is 12:18 Eastern. What color is the bar? Blue. You wait for, so here's your game plan, dead zone traders. Wait for a yellow bar, buy on the close of the next blue bar, put your stop 10 pips below the low, target 2 times that, risk 2% to make 4%. Now I got a question for you guys. Type it in ME, if you can do this. The question isn't if you want to do this. Now that's not the question. My question is, can you do this? Because we got to first figure out, can you do this? As far as ease goes. Yes, every person here, I promise you, every person here can do this. Now, the next question is, why would you want to do this? Well, let me show you. Now, we've been talking about this for 2 weeks. For 2 weeks. Let's see how the last 2 weeks you've done. So this is Monday 2 weeks ago. So we trade Monday, Tuesday, Wednesday, Thursday. So 2 weeks ago, this was your results. You lost 2%. You were looking to sell here. You lost 2%. You were looking to buy here. You made 4%. You were looking to buy here. You made 4%. You're looking to sell here. You lost 2%. How much did you make for the week? For the week, this week, plus 4% for the week. All right, that's pretty nice, right? All right, let's go to the next week. We don't trade on Fridays. We don't trade on Fridays. So now we go to the next week. Monday, Tuesday, Wednesday, Thursday, Friday. So right here. So we got Monday, Tuesday, Wednesday, Thursday. Right here. Here's the next week's trades. That next Monday, we were looking to sell. We lost 2%. Next day, Tuesday, we were looking to sell, made 4%. Next day, we were looking to sell, lost 2%. Next day after that, looking to buy, made 4%. How much did we make last week? Made 4%, right? Plus 4% for the week. How much are we up this week? Here's the 2 trades so far this week. How much are we up? 8%. Plus 8% for the week. The pound Aussie by itself, just this currency pair by itself, is up 16% since the day we started talking about this strategy. I need every person in this room to type in a WOW because that is freaking awesome. 16%? I mean, that's awesome. Following this formula at 12 p.m. Eastern, what color is it? That's the direction you're trading. You have a 2% risk, 4% stop, 4% target. You've made 16%. But here's the deal. Here's my 4 favorite currency pairs. Here's my 4 favorite. Now, Tad tomorrow is going to go into his favorites and all this kind of stuff. I'm going to show you. I'm going to go through this kind of quick, right? But pound New Zealand. Here's what we've done. Here's what we've done. Monday. You rolled in with a long bias. Right here was the. Let me zoom in and show you here. You rolled in with a buy bias. You then got your trigger here. You made plus 4% on that day. Right here. Yesterday, you rolled in with a bearish bias. You almost hit a target, but you didn't. You lost 2% that day. So far, for the pound New Zealand, you're up 2% for the week. Well, how have you done over the last 2 weeks? Overall, over the last 2 weeks, you're down a net 2%. 2%. This week, you're up 2%. Overall, over the last 2 weeks, you're down 2%. All right, pound yen, how have you done? Let's look. Monday, you rolled in with a long bias. I'm sorry, that was Friday. Here's Monday right here. Monday, you rolled in with a bearish bias. You then sold. Right here, you easily made plus 4%. Yesterday, you rolled in with a bearish bias. You lost 2%. You're up a net 2% for the week. How much you up over the last 2 weeks? Well, last 2 weeks is right here. Lost 2, made 4, lost 2. That week right there, you were down a net 2. Last week, you lost 2, made 4, made 4, made 4. So this week here, you were up a net 10. And then you made 4, lost 2. So overall, you're up a total of 10% on the pound yen. How about the dollar yen? Well, here's Monday. Monday, you rolled in with a bearish bias. Let me zoom in and show you. You rolled in with a bearish bias. You easily made 4%. 4%. Yesterday, you rolled in with a bullish bias. Unfortunately, this went down and just like ticked us out, barely stopped us out, but you lost 2% here. Barely stopped us out, lost 2%. So how have you done so far in the dollar yen over the last 2 weeks? Up a total of 10%. This week here, you made 4%. This week here, you made 4%. This week here, you're up 2%. How have you done in the last 2 weeks in these my four favorite currency pairs that I've tested in this, and it works on everything? How much money have you made, or what percentage are you up so far in these four? You're up 16%, 26%, 36%. You're up 34% total in 2 weeks. Honestly, is that impressive or what? I just want to know. I want to know your guys' opinions. How many of you, if you're not in this course, I've got 7 of you that are going to be able to trade. Obviously, all of you that are already in this, you're going to be able to be with Tad tomorrow in the special session, the kickoff session. I want you guys to be able to get this in your hands. That's what I want. I want you guys, I've been saying this for a week. I don't want you to just take my word for it. I want you to literally get this in your hands and prove it to yourself. And trust me, your education specialist is willing to do what they need to do to prove that this is something you need to have in your hands. Are you guys up 34%? Are you up 34%? Is that 34? No, 26, 36. Are you up 34% in the last 2 weeks? I'm not. I'm not up 34% in the last 2 weeks. I've taken some of these trades, and I'm very, very happy I've taken some of these trades. So here's the deal. Here's what I want to do. I want to give you guys the opportunity to get into this if you haven't yet. Pretty much this is it. We're coming down to the wire as far as the class basically filling up. It's pretty much filled up. We've got 7 more spots that are going to be able to get into the special session with Tad tomorrow. The class is next week. Now, here's what I want you guys. Now, Josh put this together, and I actually agree with this, but I want to let you guys know that I think this is actually conservative. So let's say that you're able to grow your account, like a lot of you are interested in, how do I take a small account and turn it into a big account fast? Well, you do what Josh did when he turned his $500 account into a $40,000 account in a year and a half. You compound it. You've got to get high returns. So if you are able to get 12% per month, and I just got a question. Looking at the examples that I just showed you, do you think 12% per month is realistic using this dead zone scalper? This is up 34% in 2 weeks on these 4 currency pairs. Are you kidding me? 12% per month is, like, I think that's unbelievable. I think that's really actually very low expectations compared to what I'm seeing. I actually think 20, 25, 30, 35% is actually very realistic. But if you even get 12% per month, you're turning a $1,000 account into $15,000 in 2 years. $5,000 account into $75,000. $20,000 account into $300,000. Now, let me say this. You do 20% return, you're turning $1,000 into like $8,000 in 1 year and tens of thousands of dollars in 2 years. It's absolutely great. Here's the developer. Tad Devan is the developer of this strategy. He's actually the highest rated analyst we have in the entire company. I know you're probably surprised that it's not me, but he's the highest rated analyst we have. He's the only analyst that we've had that has gotten 100% satisfaction right? And the reason why is because he keeps his classes small, and he's an amazing short-term scalp trader. It's awesome. Now, there's 5 phases to this class. There's going to be the lead-up sessions. The next one is tomorrow. We've got 7 more spots in there. There's lead-up sessions, and then the live class next week. You're going to get the manuals, the checklist, the strategies, also the workspaces. Now, we've got something very, very special for you guys. Very special for you guys. Not only do we have the lead-up session tomorrow, and I believe it's at 4 p.m., not only do we have that, but what we have is this. And I want, before I show you what's special, I want you to kind of jog your mind, and I want you to think about something. If we were able to get this into your hands with little to no risk to you, and you were able to test drive this thing out, get this going, and prove to yourself that this thing can generate income, and let's say over the next week or two, you prove to yourself that this thing can make you 20, 25, 30% monthly in additional income than what you're already getting, would that be worth potentially getting into this course? And the answer is yes, obviously. It'd be worth it for me. So here's what I want to do. All I want you to do is this. If you are not a part of the Dead Zone Scalper, the time is now. We're basically down to the wire. We're pretty much it. We've got 7 more people that will be able to get into the session tomorrow. After the initial kickoff class, it doesn't mean you won't be able to get into this, but what we're not going to do is after these 7 are gone, what I've been told is we're not going to have the bonuses of the 30 trading sessions. There's not going to be unlimited access to the trading alerts, and the price is going to be substantially higher. Here's what I want you guys to do. I've been told that your education specialists are armed with things that they can do for you to pretty close, almost eliminate any risk to you. So here's all I want you to do. If you are not in this Dead Zone Scalper, if you don't have this strategy, if you haven't been in the trading sessions, if you want to be a part of the trading session tomorrow, get this in your hands and start testing this thing out for yourself rather than hearing me talk about it. All I want you to do is type in your phone number with the word bonus right now. When you do that, your education specialist will reach out to you. They're going to tell you all the details. They're going to tell you all the ins and the outs. Worst case scenario is you type in your phone number, you have a conversation with your education specialist, you walk away deciding, maybe it's just not for you. I don't think that's going to happen personally. The reason I don't think that's going to happen is pretty simple. You got to ask yourself, are you currently making money during the dead zone? If the answer is not, then honestly, and I'm not kidding you, if you're anything like me, I don't make money during the dead zone. So for me, if I didn't go into this course, if I wasn't trading in this course, then I am literally leaving money on the table. And I'm not joking when I say that. So I believe if you are not making money in the dead zone, and more importantly, if you haven't made, this is up 34% in 2 weeks on these 4 currency pairs. There isn't another course that we have, and I mean this, there is not another Market Trader Institute course or Market Trader Institute trader that is up 34% in the last 2 weeks. I believe you guys owe it to yourself to not just take it from me, but test this out yourself. Type in your phone number with the word bonus, talk with your education specialist, and say, listen, what can I do to get into the trading session tomorrow? What can I do to try to get this in my hands and see, are there any ways, ask them, are there any ways that you can maybe help me eliminate some of my risk? Because I want to make sure if I get into this, it's all about the return on the investment, right? So what we want to do is we want to do everything we can to arm you and prove to you that you will get a return on this investment. Now, if you really think about this, I want you guys to think about this. How many weeks, if you're able to get 15%, this is averaging over 15% a week, how many weeks would you have to get 15% a week to justify that this is worth the investment? What? Guys, I don't know if I'm being clear enough. If you're able to get 15%, and I'm not expecting this to make 15% every single week, but that's what it's been doing over the last 2. If you're able even to get 5% a week, I'm telling you guys, and I'm not kidding you when I say this, you guys are eventually doing everything you want to do, financially speaking. Money is never going to be an issue ever again in your life if you can consistently get 5 to 10% per week. And I'm not kidding you when I say that. You got into this business, obviously, to be financially free. Some of you in here are doing well, but you're generating, 1, 2, 3% on a monthly basis, 4% on a monthly basis. I know some target traders. Some of you guys, listen, hey, you're racking up the pips, right? Hey, I got 10,000 pips and I'm up 3%. Come on, seriously? I'm up 10,000 pips. What percentage? 5. Oh, huh. Okay, because I'm not sure about you, but I get paid off a percentage of account growth, right? Which is pips also, but I'm more impressed if somebody's up 300 pips and 10% rather than 5,000 pips and 3%. You understand what I'm saying? A percentage is what matters, and that's what's powerful about this. This is 34% of account growth. This is more impressive than somebody being up 20,000 pips. This is account growth. This is real account growth that you guys could have had. But what I want you guys to understand is don't just take it from me. When you type in your phone number with the word bonus, what we're going to do is we're going to allow you guys to have unlimited access, lifetime access to the trading alerts. That comes to the first 150. It's supposed to be the first 150. I guess we've extended that. I've been told that there's 7 more students that are going to be allowed into the lead-up sessions and 7 more students that will get the trading alert, so you'll get that. But then also when you type in your phone number with the word bonus, what you're going to get is you're going to get, and I can't believe I haven't talked about this yet, you're going to get 30 trading sessions with Tad. And these are 30 trading sessions 3 times a week after the class. So basically for 10 weeks after the class to make sure that you're comfortable, you're confident. What we don't want is we don't want Tad and other traders making 10, 15, 20% on a monthly basis and you struggling. What we want is if Tad's making money, we want everybody to make money. And the way that we can do that is obviously you trade with Tad. So here's what I want to do. I just want to pause for a second. This is my challenge to you guys. It's my challenge. All I want you to do is type your phone number in with the word bonus. Talk with your education specialist. And then ask them, are there ways that I can get into this where you're willing to eliminate or subsidize some of my risk? Because the only risk to you guys is if you get into the course and you decide, oh, maybe it's not for you, or maybe for some reason you decide that it's not as good as I say it is. I have come to the conclusion it is as good as I say it is. I want you guys to come to that same conclusion. So if you type in your phone number with the word bonus, you talk with your education specialist, they're going to work out the details with you as far as payments, as far as costs, and then you'll be able to make the decision. Does this make sense for you or not? I believe anybody in this room that hasn't made 34% in the last 2 weeks, the answer is yes, it makes sense to you. Yes, it makes sense. But you have to make that decision. So I do want to thank those. Now, we only have 7 more spots from what I've been told. 7 spots of people or 7 students will be able to get into the trading session for tomorrow. So I do want to thank those that have typed in their phone number with the word bonus. I want to encourage everybody to do the same thing. I would not miss out on this. I got to say this real fast. How many days are going to go by of us talking about this, of this thing making money? So this week, it's up 2% on the pound New Zealand, 2% on the pound yen, 2% on the dollar yen, and 8%. So this week, you're up 2, 4, 6, you're up 14% this week. How many weeks have to go by, or how many days have to go by of this thing, you watching this thing make money before you say, oh, okay, you know what, let me try this thing out. Hopefully this is it. So I want to thank those that have typed in their phone number with the word bonus. Encourage everybody to do the same. Cheska, thank you. I've got your number. Mark, thank you. Robinson. Also, make sure understand when you type your number in, it doesn't automatically mean that you have to sign up or that you're there, that you're charging you. It means you're willing to talk. You're willing to see what we can do. Mark, thank you. Jared, thank you. Stephen, thank you. Chris, thanks for that note there. Thank you for that. Jerry, Alan, thank you. Angelo and Vonda, thank you. Jamie and Eric, thank you. I've got your numbers also. Now I'm going to keep this open for a few more minutes, everybody. I'll give you my personal recommendation. I would personally for sure be typing my number in if I hadn't yet, if I were you. Why would I do that? Because if I'm looking at it from a personal standpoint, I'm not up 34% in 2 weeks. I don't typically make money during the dead zone. So if I'm not up 34% and I typically don't make money during the dead zone, then I would be foolish not to at least find out to see if there's a way that I can get into this class, especially if there's a way that I could potentially get into this class with little to no risk to me. And I'm telling you that right now, there are ways your education specialist can get you into this class with little to no risk to you. Now, To find out the details, just type in your number with the word bonus and we'll give you all the details, and then you'll be able to make your own decision. So, all right, Veronica, thank you. Lily, thank you. Kerwin, yeah, I think it's amazing. 34% account growth in 2 weeks is absolutely amazing. Libby, thank you. Robert, and Vonna, thank you. I've got your numbers also. I will keep this open for a few more minutes, everybody. If you haven't yet, type your number in, talk with your education specialist. Don't miss out on this opportunity. Don't miss out on the trading session tomorrow. Oh, and by the way, when you do that, you actually get the strategy in your hands right away. So you don't have to wait. So you can actually start trading this right now, today. Like that's what's so important about this. Don't miss out on today. Today there's probably going to be some more great trades. I got to assume they're going to be great trades. Type your number in. Get it in your hands right away. Start trading it today. Okay? All right, everybody. Hey, listen, on that note, I'm going to end. I'm going to keep this open for a few more minutes. Everybody have a great day, and we'll talk to you very soon. Thanks.